Some new data today from our Delivering Alpha investor survey, which brings together the market intelligence of the nation's leading institutional investors, top strategists, and our own CNBC contributors. 73% of respondents say that their biggest market concern right now is Fed policy. That's followed by a potential Chinese invasion of Taiwan and labor and supply line problems. Nobody seemed too concerned about a European energy shortage, which is a little interesting. For more on the markets next year, though, we want to bring in Kevin Simpson. He is the founder and chief investment officer at Capital Wealth Planning. And Kevin, so many people are glad to be saying goodbye to 2022, especially if you've been an investor this year. It's been difficult if you've been long the market. You're a little concerned that it's not going to be so easy to say goodbye to this bear market just because we're turning the calendar page.
Yeah, unfortunately, Becky, I wish we could just turn the page and say goodbye to the bear market, but I can't give a thesis in which we're going to be able to do that. I'm not confident that the bottoms are in. I don't think that volatility is just going to disappear. And I think the setup for 2023 is very similar to what we had to endure in 2022. The economy is slowing a little bit. Inflation is coming down. It's just not coming down fast enough. And as you were just talking about with Steve, the labor market is just stubbornly strong, and the Fed is going to continue to raise rates, unfortunately. And none of those things create a really good recipe for stocks to move higher. So I think as much as we're thinking about how we're ending the year, I think we need to spend a little bit more time thinking about how we position for 2023.
And how would you do that? Is this a situation where the same themes that we saw last year continue, things like energy, things like value?
Yeah, I think it has to be. Your point is spot on. You know, we manage an ETF, DIVO, and we're hovering right around a break even. Doesn't look like the futures are cooperating today, but it's a value trade. You know, we tend to look at value over growth, and value massively outperformed growth this year. I would expect that trend to continue next year. Now, it doesn't mean I'm anti-growth. We own Microsoft, we own Visa, we own some Apple, but it's really easy to own growth stocks when you have a zero interest rate environment. And clearly we don't have that anymore. So for the growth trade to take over, you need three things to happen. You need a strong economy, you need low interest rates, and you need geopolitical tranquility. And as we enter 2023, Becky, you know, we've got high rates, we've got a slowing economy, and we certainly don't have a tranquil global macro environment. So I think the trades from 2022 and that value theme continues into 2023 for sure.
Devo is the name, like Devo the band?
Yeah, are we not men? DIVO, but we call it Devo.
All right.
Breaking even is great for 2023,
I'll remember it.
Right? You know,
breaking even would be something a lot of people would sign on the dotted line for right now. Let's talk a little bit about momentum and some of the the momentum stocks, some of the technology stocks. You're not staying away from all of them, though, right?
Well, no one loves buying the dips more than me, but I just think that for the next few months, we're going to have opportunities where you want to be frugal doing that. And I mentioned to you Microsoft, Apple, Visa, you know, they're certainly names that we own, but our whole thesis is predicated on companies that generate cash flow and distribute it to shareholders. So we don't look at the FANG names. We look for, primarily dividend companies. You know, think of the conversation you had with Frank earlier on the dogs of the Dow.
Yeah,
that strategy, it worked, right?
Right. And you like that strategy? Would you buy into it for next year?
Well, I don't really subscribe to any type of passive investing, but we did have 5 of the names in last year's list, and we have 5 names in the 2023 list. So, to Andrew's point earlier, some of these stocks have fleas, but it's a great place to look for opportunities. Jesse Pound has an article today on CNBC.com that has the list in its entirety. But, straight up, we own 5 of those names heading into 2023. And we do like that value theme for the foreseeable future.